Let me share with you a real life example so you can see exactly what I mean. Here you see my cash or put option and cover call position that I'm in right now with UPS. A while back, we were assigned some cash put options on UPS, and as a result, if you see here under average price, we bought 100 shares at just under $165 per share. Well, UPS has kind of been all over the place since then, but average cost basis is right at $164.56 per share. But notice in this line here, in the pink highlight, we've been selling additional cash put options against UPS. Notice where our strike price is. It's $145 per share. So although the 100 shares that we own, our cost basis is around $165 per share. If we were assigned this July 19th 145 put option, it would mean that our overall out-of-pocket cost was $155 per share. That vertical diversification allows you to potentially own stock at lower and lower prices. Here you see an Excel spreadsheet of my UPS position. This is a combined spreadsheet that shows all the premium as well as the cost of the shares that I currently own. This spreadsheet spans the past several years. Notice that as a result of selling covered calls and cash put options at lower and lower strike prices, although we were assigned those UPS shares around $165 per share, our true out-of-pocket cost on those 100 shares is right now at $54.89 per share. So if you're going to use the wheel strategy, consider selling lower and lower strike price cash put options, especially if a stock continues to decline. If you do that, you just want to make sure that you feel comfortable owning that stock at the strike prices of the cash put options you're selling. One of the ways I do this is that I have specific rules when it comes to position sizing. When I enter a new position, the maximum I want to have at risk in any one position is around 2 to 3% of my overall portfolio. However, if a position goes against me, I then allow my maximum position size to be 5% of my overall portfolio. That leaves me 2 to 3% to repair a position, or as you've seen here, to sell put options at strike prices below where I was initially assigned the stock at.